Hello future CS, welcome back to my channel again. So this is the part 3 of the video of solving MCQ from the case scenario booklet for CA final FR. So in this video we will try to solve the case scenario number 3. So request you all to grab a notebook and pen, and you can also start solving this along with me. And guys, in case you are new to my channel, I request you all to subscribe and hit the bell icon below so that you can get notified whenever I post new videos. So guys, when you visit my channel in the playlist section, you can see there is a separate playlist for CA final exam. And there is also a playlist for CA final auditing, CA final AFM, and also there is a playlist for this case scenario booklet where I'll be adding more videos by solving the case scenario questions. There is also a playlist as CA for students. In this I have made some videos demonstrating different techniques in which you can use CA while preparing for your CA exams. So please visit my channel and you can watch all of these videos. So first let's read out this case scenario and then let's try to solve the MCQ related to this. A Limited is a diversified business group operating in multiple business segments across different parts of the world. It maintains its books of account and publishes its annual financial statements under Ind AS. The finance team has been working on closing the books of accounts and generating financial statements for the year ended 31st March 2022 and are facing the issues in the following transactions while finalization of financial statement. So issue number 1. A Limited owns 250 ordinary shares in X Limited, an unquoted company. X Limited has a total share capital of 5,000 shares with nominal value of rupees 10. X Limited's after tax maintainable profits are estimated at rupees 70,000 per year. An appropriate price earning ratio determined from published industry data is 15 before lack of marketability adjustment. A Limited's management estimates that the discount for lack of marketability of X Limited shares and restrictions on their transfers is 20%. A Limited values its holding in X Limited share based on earnings. Issue number 2. A Limited has a telecom segment. It entered into an agreement with B Limited, which is engaged in generation and supply of power. The agreement provided that A Limited will provide 1 lakh minutes of talk time to employees of B Limited in exchange of getting power equivalent to 20,000 units. A Limited normally charges 50 paisa per minute and B Limited charges rupees 2.5 per unit. Issue number 3. A Limited began construction of a new building at an estimated cost of rupees 7 lakh on 1st April 2021. To finance construction of the building, it obtained a specific loan of rupees 2 lakh from a financial institution at an interest rate of 9% per annum. The company's other outstanding loans were as follows. Rupees 7 lakh, rate of interest per annum is 12%. Rupees 9 lakh and rate of interest per annum is 11%. The expenditure incurred on the construction was as follows. So in April 2021, rupees 1,50,000, August 2021, rupees 2 lakh, October 2021, rupees 3,50,000, January 2022, rupees 1 lakh. The construction of the building was completed by 31st January 2022. The construction of the building started on 1st April 2021 and all the expenditure on the construction of the building had been incurred at the beginning of the respective months. So in this case, the following Ind ASs will be applicable. So Ind AS 113, that is fair value measurement. This will be for any questions relating to value of investment in X Limited. That is for issue number 1 here. And then Ind AS 115, that is revenue from contracts with customer. That is for questions relating to telecom segment transactions. That is issue number 2. And then Ind AS 23 borrowing cost for capitalization of borrowing cost on building construction. That is for this issue number 3. And as and when we read the MCQ and solve, let's see if any other Ind AS are also applicable. So now let's see the first MCQ here. What is the value of shares of X Limited? Option A, rupees 8,40,000. Option B, rupees 10,50,000. Option C, rupees 8 lakh. Option D, rupees 10 lakh. So this question relates to issue number 1 which we saw above. So the value of share of X Limited is computed as follows. So here the applicable Ind AS is Ind AS 113 fair value measurement. This Ind AS applies here because A Limited is valuing its investment in X Limited using earnings based approach. So in order to compute the value of shares of X Limited, we have to follow two steps here. So step number 1 is to calculate the total value of X Limited. So the formula for this is the total maintainable profit into the PE ratio. So the maintainable profit is rupees 70,000 and the price earning ratio is 15. This is given in the question itself. Hence the total value of X Limited is 70,000 into 15, that is 10,50,000. However, in the question we saw that there is a marketability discount of 20%. Hence, in order to arrive at the final total value of the shares of X Limited, we'll have to apply this discount as well. So, step number 2 is applying the marketability discount. So, marketability discount is 20%. Hence, the adjusted value of shares will be 10,50,000 into 0.8. That is 8,40,000. Hence, the total value of shares of X Limited will be rupees 8,40,000. So, the final answer is A, rupees 8,40,000. Now, let's see MCQ number 2. What is the fair value of A Limited's investment in X Limited shares? Option A, rupees 50,000. Option B, rupees 42,000. Option C, rupees 10,50,000. Option D, rupees 10 lakh. So the fair value of A Limited's investment in X Limited is computed as follows. So here also the applicable Ind AS is Ind AS 113, that is fair value measurement. This Ind AS is applicable because A Limited is valuing its investment in X Limited using an earnings based approach with the marketability discount. So while computing the fair value of A Limited's investment in X Limited share, there are two steps to be followed. The first step is to calculate the total value of X Limited, which we already did in the question number 1. That is the 8,40,000. So step number 1 is calculate the total value of X Limited. So first we multiplied the maintainable profits with the P ratio, and then we also accounted for the marketability discount. So step number 1, total value of X Limited, that is 8,40,000. Also, one important point while solving any practical question is whenever you come across any formulas, it is better to note down in a separate book. So whenever you are solving each and every question, if there are different formula for each question, you can go on noting down the formulas at one place, so that one day before exam it will be easy for your revision. So the first step here is already we have computed in the question number 1. Next step number 2 is calculating the A Limited share in X Limited. So A Limited owns 250 shares out of 5,000 shares. So here we'll have to compute the proportionate fair value. So for 5,000 shares, the share value is 8,40,000. Hence for 250 shares, the proportionate share value will be computed as follows. That is 250 into 8,40,000 divided by 5,000. That is 42,000. So here the final answer is option B, rupees 42,000. Now we will see the MCQ number 3. By what amount the revenue be measured and recognized by A Limited in case of the telecom segment? Option A rupees 10,000, option B rupees 2,50,000, option C rupees 2 lakh, option D rupees 50,000. So this question relates to issue number 2 above. And here Ind AS 115 will be applicable, that is revenue from contracts with customer, because A Limited is exchanging telecom service, that is talk time, for power units, and the revenue needs to be measured at fair value. So the amount of revenue that will be measured and recognized by A Limited in the case of telecom segment will be computed as follows. So as I told just now, Ind AS 115 will be applicable. And the first step now will be to identify the transaction details as given in the question. So A Limited provides 1 lakh minutes of talk time, which is normally charged at 50 paisa per minute, in exchange of 20,000 units of power, normally charged at 2 rupees 50 paisa per unit. So determination of fair value of revenue recognized. So according to Ind AS 115, when goods or services are exchanged for other goods or services, revenue is measured based on the fair value of what is given or received whichever is more reliably measurable. So let's see in this case. So first we will compute the fair value of talk time provided. So 1 lakh minutes of talk time is given at rupees 50 paisa per minute. Hence the fair value of talk time will be 1 lakh into zero point 0.5, that is 50,000. Now we will compute the fair value of power received. So 20,000 units of power is received at the rate of 2.5. So fair value of power received is 20,000 into 2.5, that is 50,000. So in this case both the values are measured reliably and both the values are same. Hence the fair value of revenue to be recognized is rupees 50,000. Hence the final answer is D, rupees 50,000. Now let's see MCQ number 4. So question number 4. What will be the capitalization rate for computation of borrowing cost on the building based on general borrowings? Option A 9%, option B 11%, option C 11.4375%, or option D 12%. So this question is based on the issue number 3 given in the question. So capitalization rate for computation of borrowing cost on the building based on general borrowings. This is computed as follows. So first step is to identify the Ind AS. So the Ind AS 23 is applicable here. That is the borrowing cost. This Ind AS applies because A Limited is capitalizing interest cost incurred on borrowing used for constructing a qualifying asset, that is the building. So first step is identify general borrowings and interest rate. So in the question itself, this information has been given. So A Limited has the following borrowings. So we have seen this from the question itself. Loan amount 7 lakhs, interest rate is 12%. Loan amount 9 lakh, interest rate is 11%. Hence total general borrowing is 16 lakhs. Here the weighted average method will be used to compute the capitalization rate of the borrowings. That is 7 lakh into 12% plus 9 lakh into 11% divided by 16 lakhs. Let's have a look at this. So applying the formula that I just now discussed, the weighted average capitalization rate is 11.4375%. Hence the final answer is option 3, 11.4375%. So now we will see the fifth MCQ. What will be the total amount of borrowing cost on specific borrowing? Option A rupees 11,250. Option B rupees 13,500. Option C rupees 15,000. Option D rupees 37,875. So this question is again based on the third issue above. So the total amount of borrowing cost on specific borrowing is computed as follows. So here again Ind AS 23, that is borrowing cost is applicable because again A Limited is capitalizing borrowing cost incurred on a qualifying asset, that is the building. So first we'll have to identify the few details given in the question. That is the specific loan amount, that is rupees 2 lakh. Interest rate is 9% per annum. And the construction period is from 1st April 2021 to 31st January 2022, that is 10 months. So these are the important points given in the question which will be required while solving this part of the question. So let's note down this first. So the next step will be to calculate borrowing cost on specific borrowing. So the formula for this is borrowing cost is equal to loan amount into interest rate into construction period in months divided by 12. So here the loan amount is rupees 2 lakh, interest rate is 9% and the construction period in months is 10 months. Hence the borrowing cost on specific borrowing by solving this will be rupees 15,000. Hence the final answer is option C, rupees 15,000. Now let's see the sixth MCQ. Question number 6. What will be the total amount of borrowing cost on general borrowing? Option A, rupees 22,875. Option B, rupees 15,000. Option C, rupees 37,875. Option D, rupees 13,500. So this question is again based on the issue number 3 in the question. So let's see the total amount of borrowing cost on general borrowing. So here also again Ind AS 23 is applicable. Ind AS 23 is borrowing cost. As we mentioned above, A Limited is capitalizing interest cost incurred on borrowing used for construction of a qualifying asset, that is the building. Hence Ind AS 23 will be applicable. So the first step will be to identify general borrowing details from the question. So in the question itself, we have some general borrowing details. Let's note that down. So the loan amount is 7 lakh and interest rate is 12%. And there is another loan of 9 lakh and the interest rate is 11%. So total general borrowing is 16 lakhs. So after this, the next step will be to compute the weighted average cost of borrowing. So this we had already computed, I think, in the question number 4. Yes, right. In the question number 4, we have computed this. Capitalization rate, that is weighted average cost of the borrowing. So there are two borrowings, 7 lakh into 12%, 9 lakh into 11% divided by the total amount of the borrowings. So this is the weighted average cost of the borrowing. So the next step here will be to compute the weighted average borrowing cost for capitalized amount. So for this purpose, we have to check in the question the total expenditure on construction incurred at the beginning of each month. This is already been given in the question. So in April 2021, 1,50,000 expenditure was incurred. In August 2021, 2 lakh expenditure was incurred. In October 2021, 3,50,000 expenditure was incurred. and in January 2022, 1 lakh expenditure was incurred. So each of this expenditure was incurred at the beginning of the month. The next step will be to compute weighted average expenditure. So since the expenditure is incurred at the beginning of the month, the weighted average outstanding, that is till January 2022, will be computed as follows. So we have to multiply the amount of expenditure incurred at the beginning of the month into the month's outstanding till January 2022. So for the month of April, it will be 1,50,000 into 10 months which are outstanding. So 15 lakhs. For the month of August 2021, it will be 2 lakh into 6 months outstanding. That is 12 lakhs. Then for the month of October, it will be 3,50,000 into 4 months. That is 14 lakhs. Then for the month of January 2022, 1 lakh into only 1 month is outstanding. So it's 1 lakh. So the total weighted expenditure will be 15 lakh plus 12 lakh plus 14 lakh plus 1 lakh. That is 42 lakhs. Total weighted expenditure. And the total months considered will be 10 plus 6 plus 4 plus 1, that is 21 months. So weighted average expenditure will be 42 lakhs divided by 21, that is 2 lakhs. So the total amount of borrowing cost on general borrowing will be this weighted average expenditure into the weighted capitalization rate. So 2 lakh into the weighted borrowing capitalization rate, which was 11.4375%. So the borrowing cost on general borrowings will be rupees 22,875. So the final answer is option A, 22,875. So that's it guys for this video. We have solved the questions from case scenario number 3. I hope this video was helpful for you all. In case you found this video helpful, please subscribe to the channel and also like and share the video. And I have also made a separate playlist for the case scenario CA final FR, and more videos will be added to that playlist in the coming days. So request you all to stay tuned to the channel. Thank you for watching the video and I will see you all in the next video. All the best guys.